JD, you got a preferred pick for gold M&A?
I do have a preferred pick.
Yeah, I think this is the best kept secret on the ASX, this one.
My gut feel is to pull some chips off the table, but enjoy it while it lasts.
I'm exhausted, JD, Ben. I'm like, the market is moving so fast paced. I feel tired just keeping up with it. It's almost hard to lose money in this market at the moment. Things are that like fun and crazy and awesome, and we're kind of hooked in a way that only happens in a bull market. But even if it is only for a period of time, who cares? It's fun. I'm loving it. Are you loving the bull market, Ben?
We are. It's always good to be a small caps fund manager in a small caps bull market, especially when you do resources and gold is going vertical by the day, it seems. So, no, it's good market conditions. Hopefully can make some hay while the sun shines.
Could you imagine how much you would be hating life if you didn't cover resources as a small cap fundy? And I know there's heaps of them that do that. Like, don't know why.
It's a big risk in the Aussie market, I think, to kind of ignore a 30% plus chunk of the market. But yeah, you do see a lot of the East Coast guys tend to shy away from it. Unfortunately, it's working while tech and a lot of the other things that dominate the small cap universe are working as well. But for how long, it remains to be seen.
What's your kind of natural positioning to it, Ben? Like, personally, for instance, I'm kind of scared, you know, it kind of terrifies me, and my gut feel is to pull some chips off the table, but enjoy it while it lasts all the same. What's your kind of natural feeling toward this type of market?
Yeah, I think that's probably the right approach. Having said that, I think if you look at a lot of the flows into the small end of the market, that's kind of come full circle since sort of 2022 when we saw interest rate rises. Money came out of small caps and micro caps particularly. And although it's kind of smalls have outperformed large in the last few months, there's still a fair bit to go in that catch-up trade to kind of get back above on a multi-year basis. So a bit of retail returning to the market, but I still don't think we're quite at the heady days of maybe peak kind of 2020, 2021, where you had it felt like every capital raising was going up and you had to be in everything, and your taxi driver's making money, your neighbour's making money, and yeah, it's that was a crazy time, but I don't think we're quite there yet.
My taxi driver's making money. Yeah, I can hear him just like, Uber driver. I could see him watching like, you know, financial YouTube videos as he's
driving.
Well, as he's driving my Uber. Yeah.
I had a friend sent me a picture inside of his own in Uber in Singapore, and the Uber driver had the Uber screen plus the markets that he was trading and the gold price all in one. So I don't know what that tells you.
I don't know either. I should probably point out to our audience who might be unfamiliar with your voice. Ben Richards is your name of Seneca. 2 years into running the fund there, like really, really impressive results in that 2 years. So congratulations to you, mate. I know you're a bit of a market animal, and you're across a lot of the names in our sector. We're going to talk about a lot of the gold companies, the small cap golds, the gold miners, energy stocks, mining services stocks, and we're of course going to cover the news of a week. This is a weekly wrap, JD. What have we got to start?
Mate, we've got heaps. I reckon the logical place to kick off, like you said earlier, Ben, is gold. So gold smashed through US $4,000 an ounce, hit 6,000 Australian dollars an ounce, which is just something to behold. And there's so many interesting pockets of the market. Trav, I think we should start here with Tether. I know you did a bit of reading on what Tether's done, and everyone's focused on the central bank aspect, and that's undoubtedly been massive since Russia-Ukraine really kicked off. But the presence of Tether and the amount of gold they're buying, I don't think is fully appreciated.
Yeah, it's all just an expression of the same thing. And what is that? Like, you know, it's like everyone's kind of awake to the debasement that is clearly underway. And it's funny, like things are gradual and then all at once. And I think Tether's just like an expression of that from people who people who have been thinking thoughtfully about the way the world transforms over time because they're entrenched in the monetary system. And people kind of get confused when you talk about Tether and you talk about like Tether's relationship with gold because they think it's all about Tether gold. It's not. That's like a very like small kind of part of the equation here. I'm talking about Tether the company, which is a cash machine, and people hate when I say that. I don't care. It's true. There's no audit. I don't care. There's attestations. So So yeah, if you just look at like what the attestations from BDO point out, that Tether has actually purchased of gold in the last 6 months. So this is in the first half of the year. It's 19 tons of gold. 15 of that came in the second quarter of that first half. So like dialing up massively on the gold like purchases specifically, and that's like comparable with what the World Gold Council's numbers attribute to China's own central bank in the same period. China's own central bank in that first 6 months bought 20 tons of gold, or Tether bought 19, and is dialing up faster.
That like needs to be underlined. That's astounding.
Massive. Now China like has many different sources, and they're not all kind of captured probably by the World Gold Council, and maybe there's like much more than is attributed from their survey to central banks, because you don't always get the right number. But I think it's a pretty important point. Tether now has more gold, bullion reserves than Australia's own central bank by 2 tons. And a couple weeks ago, I think like, I don't know if people miss this or not, but Tether, the company, they raised $20 billion at a US $500 billion valuation, making it like the most valuable or the second most valuable private company in the world, which is a staggering kind of thing to point out. And that $20 billion, it's not like they needed to raise that money, because you can see in their attestations, they actually paid out $7 billion of dividends in the 6 months before that, and they've paid pretty big dividends in the years before. They didn't need the cash, but it's, in my mind, I'm pretty sure it's the money you raise and you place it to instos before you go public. This is you get instos or whatever set at some price, and then the IPO comes at a higher price, so people are up on the listing day one, happy days. It's the raise you do before the public listing.
Yeah, this is not an unprofitable tech company by any stretch of the imagination. But
cash flow is not an issue.
I think to tie it all together, we're at a super interesting point in time in the gold market.
Even before that, where's that $20 billion going, right? So they raised $20 billion. They didn't need the money. So they have to deploy that $20 billion. Where is it going? Buying gold. It's clear as day. They are buying so much gold. Like, gold is getting bid at every price. There's no dip that doesn't go up, because you've got you've just got insane support from huge pools of capital that are rotating into the real assets, specifically gold, because the debasement of fiat currencies is it's kind of happening all at once now. People are clued on, and they're positioning accordingly. What do you think, Ben?
Yeah, well, I think you've done some good work, Trav, looking into Tether, and obviously a massive player now. Love them or hate them, but I think it's interesting that they're pivoting to gold, physical assets like royalties. Is another one they're kind of chipping away at through Elemental. So yeah, I don't know what that says for kind of the prospects of crypto as a store of value, or if it's more just a bullish thing for gold. But yeah, this price indiscriminate buyers, like I was talking to a broker this morning who was saying, oh, gold looks, pretty hot here at US 4,000. And they were saying, I just don't see what changes though, in terms of, this price indiscriminate central bank buying, like what's going to be the catalyst to actually stop that. So yeah, it's an interesting juncture really.
So how do you think about putting money into the gold names out there? And we'll rattle through a bunch of the ones that pre-reported on the quarterly announcements, but are you more inclined to take chips off the table at the moment?
Well, I think it's just about how you play it. So there's the producers and the unhedged producers, which have kind of been the first to run, and we were on Genesis and one or two others, but that's kind of the poster child, I suppose. And then I think now we're starting to see money flow down into the developers that haven't really moved as much, and maybe the explorers. But yeah, there's probably multiple ways to skin the cat. Like, we quite like some of the services names and the trickle down beneficiaries of a higher gold price that aren't just necessarily buying your favorite unhedged miner, which already trades at a premium valuation.
Well, why don't we start running through some of these names? Trav, kick us off with Capricorn, mate.
Mixed week for Capricorn. Not because of what they reported. Like, it was a record quarter for ounces, record throughput for fresh material. Color winter expansion, construction fully ramped up now. And yeah, like they, reserves are now 4 million ounces I saw. So why the mixed week on the share price? Well, it came as a result of the bump for Warriedar shareholders, which we'll get to. We'll talk a bit more about that. But what was in effect like a $20 million bump? The immediate reaction was a $225 million fall in Capricorn's market cap, which always makes sense, right? But there's a relative arb that kind of happens in short-term gyrations. Anyway, they recovered all the gains, and Capricorn's now a $14 stock for the first time, as you can see on our focus chart, mate, right behind you. How good is focus by Market Tech, mate? I've been loving it, loving using the ability to do screens, loving the heat maps, loving just feeling like a pro while observing the market, reading the market, making trades. It is an institutional platform, retail price. Link is in the show notes if you want a 10-day free trial, by the way.
Mate, couldn't have said it better myself. Institutional grade product at a retail price. Check out Focus, the platform by Market Tech, today.
It's even like Money and Mine is on there. How cool is that?
$14.
Yeah, $14 stock. It's pretty remarkable. Is it a name you've owned in the past, Ben?
Not. It's always had that kind of management premium. Everyone knows that they're good operators. They've had, Carla Winder's going well. They've obviously got Mount Gibson growth project kind of coming online. So it's easy to kind of extrapolate the current production forwards at a reasonable level of confidence. So you can kind of understand why it trades there. I would say it's probably one of the 2 or 3 names that you do get the generalist fund managers piling into that can do gold. But yeah, here on a 6 billion market cap, it's kind of, what more can go right for Capricorn is kind of my argument. Or even if they continue to do well and gold continues to do well, is it the best way to express that view in the current market? So we don't own it.
I thought the same at $5, but here we are.
Yeah.
But I totally see your point, Ben.
Speaking of another one that has always just been too expensive for me to ever think there's an opportunity, and then it just continues to defy gravity. Emerald, but in a week where gold went bananas, Emerald were pretty flat. Another kind of disappointing production number. So Emerald has maybe had some disappointment in relation to production. They've talked about this for a period of like 10 months now. I think this quarter will be the last of the very disappointing quarters, but the rest of the pit, what's to come, isn't going to be as strong as what's been mined before. And because Emerald's one of those companies that they never provide like 3-year guidance. It's very short dated guidance. So whether or not like the market's expectations of what's to come out of VOXR are the right expectations or not yet, like all of that's still to play out. So they've been thrown around, in a week where gold is absolutely soared. Emerald's pretty flat. Hopefully the worst of the woes at VOXR for a brief period of time are over. But the best part of the pit's always the beginning.
Yeah, well, 3 production downgrades in a row, I think, in the last 3 quarters. They reckon they're going to get into that ore in December, but it's always, downgrades never come in ones. But I think it's just under a 3 billion market cap. It's been a bit left behind, as you said, so it's kind of to the point where it's maybe interesting, but it's quite interesting to stack it up versus Capricorn, I think. Like you've got currently about 100,000 ounces per annum, going to about 300, 350 if you include the Cambodian growth project, Memot and Dingo Range in WA. So you can kind of see, like, this is probably the first time that we've looked at Emerald in recent times and thought it's potentially value, but you're also, like, it's Cambodia, it's what's the jurisdiction discount relative to, say, a Capricorn, and now you've got potential production issues, so maybe cheap for a reason. Don't own it, but it's definitely on the watch list.
They've also got it's like a 20% stake in Golden Horse. Like I want,
yeah,
and I mean, like Emerald's an interesting miner in that they can take a view on a smaller resource than most miners will, and actually build a plant and develop it. Like how many miners are willing to build something on a 500,000 ounce reserve, but like that's Emerald will. So yeah, I don't know if Golden Horse is like a more curious way to play Emerald's growth story.
Yeah, potentially. It's just kind of one of those ones in the bucket of WA developers, explorers. Probably can't own them all, but yeah, it looks sort of interesting.
Well, we'll go on to another one now, which is a pretty hotly controversial one. And I know we had a bit of a chinwag about it recently, Ben, but Bellevue Gold. So I'll run through the highlights from the quarter. They announced free cash flow before hedge book deliveries which kind of rings out as a bit of a bullshit number, but you need to get into the details a bit. That number was 33 million, but they delivered 9,500 ounces into hedges that were actually meant to come over the following couple quarters. So the gist of what they're doing is just trying to smooth out the ups and downs that we're going to see over the coming quarters, having had that capital raise and pushing out of the hedge book throughout 2025 already. On the physical side of thing, they produced 30,000 ounces, and there were some records in there. Record production processed volume, 300,000 tonnes at 3.2 grams per tonne. 3.2 grams per tonne sounds a lot lower than the numbers we had years ago expected from Bellevue, but things evened out in the wash here because the tonnes were a bit higher than anticipated. But ultimately, 30,000 ounces coming out, and guidance is about 140,000 ounces for the year. We're going to expect kind of stronger numbers going over the next quarters. When you sort of take this all into account, Ben, are you disappointed? Are you happy with how things have progressed? I mean, they've had a bit of a run lately, and they hadn't done so. They hadn't followed the rest of the goldies for quite a while there.
Yeah, I think you can probably bucket the goldies into ones that have just been following the spot price and ones that haven't. And for the ones that haven't, that have just been kind of trading sideways, Bellevue's one pretty interesting one. We own a small position in our small caps fund at Seneca. It's probably just the production story. So I think, yes, they're probably not making that much money if you strip away if you include all the hedges. But on a look-through basis, I just think if you've got a high-grade asset in WA with good scale potential, you mentioned 140, but probably you can squeeze a bit more production out of this asset in time. I think they're kind of still looking at that 150 to 200,000 ounce per annum range. So, yeah, just think the strategic value can't really be ignored. It's interesting that nothing's happened yet and the stock price has kind of run. So I don't know if that changes the dynamics per se, but yeah, still think just the strategic value that you could get an offshore acquirer or a local having a good look at it. So yeah, don't mind it for a small position there.
Yeah,
it's potentially telling.
Yeah. I mean, they were pretty public about a public process. So, but heck, things are dynamic, things change, gold price changes, and when you underperform everyone else on a relative basis, then you kind of are more attractive on a relative basis. But then at the same time, it's all about volume for Bellevue, because the hedge book's the overhang. I think they've done a really clever thing in pre-delivering, in this quarter. You need to address that hedge book with maximum volume at this point in time as is possible, and hopefully things keep turning in the right direction.
Yeah, totally. People hate those shocks to the downside. To the upside, they're all right, but to do the best of their job and smooth that out is a good thing, I think. If we go to another one that's had a couple disappointing quarters of late, Ora Banda, and I know again, Ben, you've held this one in the past. Now the numbers looked way better when you compare them to the previous quarter, because the previous quarter was a bit of a stinker and it was below expectations. This one still came in a touch below expectations at, call it 31,000 ounces produced, but free cash was 38 million. So they're in a healthy position. And the part that stuck out to me, curious to hear what you think of this, Ben, they paid $7 million in put option premiums. So they've locked in the option to sell, call it 33,000 ounces in the back half of next year at 5,000 Aussie. Now that's an interesting type of risk management. It's not the classical hedge book way that has been the traditional way in which goldies have played this. But when you come at it from a generalist perspective, looking at gold names, is that something you're a fan of or not so much?
It's a bit of a curious one. I mean, the exact hedging strategy is probably your boys' department, in the sense of it's one for the bankers to get the best bang for buck. And maybe if they think the put options are hedging the downside tail risk. And then other than that, you leave it unhedged. I think it probably makes sense. Would I be doing it? Probably not in this environment, but that's always famous last words in a sense. So yeah, I think Ora Banda, it was a touch below, but the trajectory is still pretty attractive. You're talking 140 to 155 guided for FY26. we've actually never owned this one kind of on its first run up. Everyone kind of banged on about how good management is and how it was, a simple production growth story, all those things that are kind of well known in the market now. Uh, it's kind of one that was always comped to like Pantoro, both on that 100,000 ounce with growth potential, largely unhedged way to play gold, except for when, Ora Banda pulled back a fair bit and it basically traded down to kind of a more peer average valuation. And that's kind of when we took a look at it when it was probably 70 or 80 cents. We met with Luke Cray, and I kind of can see why everyone backs him in so hard. Pretty impressive operator, and he just pretty clearly stepped through like what they're doing to deliver that growth with reasonable confidence, I suppose. And yeah, I think they've got a bit of optionality there at the two underground mines. So yeah,
Yeah.
continue to like that one.
Yeah, yeah. I think that's sort of well said. Optionality and expectations as well. I mean, they chucked in the line that they are forecasting to improve quarter on quarter throughout the rest of this financial year. So I think they're going to kind of be held to that. Obviously, 4 times 30,000 ounces doesn't get you to your 150 number. So need a bit of an uplift in the back half of this financial year.
It's interesting you comp them to Pantoro, and I think like one observation I've had in like the gold bull market to date is like, yesterday's underperformers are today's outperformers, and vice versa. Like when Ora Banda was outperforming, Pantoro is underperforming. Or when Ora Banda underperforms, Pantoro outperforms. Similar with like like a Volt Genesis or whatever comp, like like the recent like larger producers or mid-tier producers that have outperformed to be like a Volt and a West Gold, and they were underperforming pretty substantially in the preceding kind of 12 months. And like there's mean reversion's a thing, and as gold price goes up, the higher cost producers also experience more torque in that environment, and it's not a bad strategy to kind of try and screen for the goldies that maybe haven't had the greatest performance of late, sometimes just in this kind of market.
Yeah, I think Vault was a classic example where, it was the cash vault and no one never going to pay the cash out.
I can't believe I've never heard that. That's great.
I mean, for all the financial analysis, and all we end up doing is just screening through these names and like, oh, this one hasn't run yet. It's got to be next to go. Like it's a bit simplistic.
Like it's funny, like it is kind of, you can be a bit simple and dumb, can't you? Like, yeah,
but it works.
We literally ran a screen the other day just on, like gold juniors with greater than 600,000 ounce resource and a market cap less than $60 million. And we're like, oh, let's just buy 3 of these.
They look pretty cheap, eh? We'll see what goes. I think we got one more Greatland. Did you want to chat about Greatland, Trev?
I've observed your discourse, well, your popularity amongst the Greatland Gold shareholders.
Or lack thereof.
Isn't it interesting? I mean, I think they're, as far as like retail community shareholders go, I've got a real soft spot for the Greatland ones. They're all very like polite and civil, and they want to convince you of their thesis as opposed to like antagonise. So good on you, Greatland shareholders. I think it's like the London kind of, the English politeness that kind of shines through. But you've antagonised them because of your bullishness that they're going to buy Antipa. Has anything changed?
Nothing's changed. Well, actually, no, things have changed. Greatland has recovered, so the equity value is higher, and the cash is building. I think it's now 750 as of the last quarter. So if I think, what's changed in the last few months, I would say it's actually more likely that they've got more firepower to do a deal. Obviously, Trav's referring to Antipa Minerals, AZY, which we've been pretty public on, that we think is a takeover target. But yeah, more broadly, I think it's just a question of can you find those ounces that actually have a meaningful path to production, realistic path to production in the current cycle, I suppose, which maybe explains why some are running and some haven't. But yeah, still think that deal gets done. It's interesting you mentioned the Greatland shareholders, because it's just always interesting to see what criticisms you kind of get to test your own thesis. And yeah, there's been nothing there that really makes us concerned when you're copying things like, oh, maybe they'll do it at some point, but they definitely won't do it now, and just things like that from, and some, you get accounts coming back at you that only have ever posted about Greatland, and it's like, well, I'm not sure who this is anonymously on an anonymous media platform. But yeah, it's always interesting to kind of get the feedback from all kinds of people across the market.
Yeah. So one of the interesting theories, I don't know where we heard it or we wrote about it, but is there a potential that Greatland very well could actually do a deal with Cyprium, somewhat in the neighbourhood, spare milling capacity, capability to do something with copper ores? Is that a theory you've kind of, and also by the way, like much faster permitting ability versus Antipa, where your timeline's a bit longer. Have you really thought through that potential as an alternative?
Yeah, a bit. I mean, there's not too many other projects around there. Like I'd say Antipa and Cyprium, and then there's probably only really earlier stage ground of any meaningful scale. I think with Cyprium, it's probably a case of they've got their own plans. They've pretty. I doubt they'd be too open to. Maybe I'm wrong, but I think they just raised a big chunk of equity and kind of seem to be trying to do it themselves. And it's probably more the copper angle. So you can never rule anything out. But I think the key with Antipa is it's actually closer than Havieron, distance wise, I believe, and it's gold dominant. It's kind of the same. Um, same as they've already got, but just kind of extends, I suppose, the scale and confident mine life that they can put together to the market. And, they're trading on probably a discount, many would say, to the ASX peers, I would argue, because of that kind of mine life and development uncertainty. So, yeah, I think the other thing with Antipa is it's actually covered under the existing Telfer radius native title, I believe. So, potentially that could accelerate permitting as well if there was to be a deal done. So yeah, I mean it's to us it's probably the cleanest or the clearest gold takeover. Like there's a lot of your Astrals have always come up in kind of takeover discussions of decent scale resource in a region where there's a lot of milling capacity, or a lot of mills at least, I should say. So there's definitely a few ways to play that kind of M&A angle, but yeah, AZY is still our preferred pick.
JD, you got a preferred pick for gold M&A?
Gold M&A, I do have a preferred pick, Sunstone.
Ding, ding, ding.
Yes, ding, ding, ding. The company's been pretty open about pursuing various forms of M&A / joint venture arrangements, but we're talking Ecuador here, copper gold, early stage, like not such a demanding market cap, So that's my one. Have you got one?
Yeah, ding, ding, ding. Emerson.
Yep.
Been long since the JV partner was taken out by Pan African Gold. Emerson was 6 cents. It's now 24. Gold's moved a long way, but Emerson put out this. Emerson's it's got a funky kind of JV relationship with the JV partner. It's kind of tricky to wrap your head around, but effectively, there's an earn-in relationship. There's this 6% gross royalty on certain deposits, and then there can also be when some things are classified as a larger mine, it becomes a 40% contributing interest. Now, why does all this matter? Because early next year, Emerson will receive an $18 million payment from Pan African, who's the new operator of a mill that's in production there. Commissioning's going really well there. It's just much cleaner to clean up that joint venture. Clear synergies. The big attractive thing is the fact that with Emerson has this White Devils project. They put out a scoping study on that. You run that at spot gold today, and it's a very, very attractive project at spot gold. There's no doubt, and it will displace feed at the Nobles mill like that much earlier in the mine plan. I feel like Pan African are going to try and deploy as much of their cash that they're making in Africa into Australia as they possibly can, and Emerson is the most logical thing they can do.
I like both of them. I think Trav bang on with that thesis from what I've seen at least. And JD, I'm not as familiar with Sunstone, but I know there's been a fair bit of M&A activity in Ecuador. I looked at Titan TTM, which is also just another one of these developers that kind of you think, is there an M&A angle? But yeah, a lot of money flowing around in that area. So
the majors are looking at it,
yeah.
Yeah, I mean, there's another one we should chat about as well, and it doesn't have the kind of same populist zeal that I know you love, Trav, but Minerals 260 was flying very much under the radar from when they did the recap, took on the Bullabulling asset uh, within the last year or so. But then they did have a kick up. And Ben, you've followed this one for some time. So they went from, 12-ish cents from memory, now over 30 cents all of a sudden on the back of this gold run up and everyone kind of taking attention, and perhaps now other companies running the ruler over it. Is that part of the thesis here, or is it just sort of screening cheap on the development basis?
Yeah, I'd say it's more the latter. I mean, yeah, as you said, it was a really chunky raise, 220 million bucks. The stock was just trading at 12 to 14 cents in that range for ages. Despite it being, pretty good assets, particularly in a gold bull market. Um, yeah, of scale, well over 2 million ounces, and that's probably, I think it's almost 4 million ounces on an unconstrained basis, which, read into that what you will. But I think the point is that they've identified it as an asset where there's some easy wins. They can put out some drill results, extend the resource boundary along strike and at depth, and yeah, just super cheap. So bought some of that at I think 14 and maybe 16 cents around there. And it has run, I mean, to be honest, it's actually run a lot harder and in a short amount of time than we would have expected. But I think it's just kind of one of those ones where, yeah, a few people get onto it, then a few more people get onto it, and all of a sudden it kind of re-rates at least closer to fair value. But yeah, I think that's a pretty good project, and maybe will attract M&A, but it's not the make or break for the thesis, I suppose. Yeah.
I like it. I like it. So one of the things that we were chatting about here, Ben, throughout this week and over the weekend, doing a bit of research, was the commodities that haven't been so hot. Obviously, the whole basket we've spoken about there, gold is on a tear, and it's an interesting time to look around the field, because commodities is all we kind of know here, and think about where could we park some money that'll do well in the medium to kind of long term. And the energy complex is the one that kind of jumps out at you. So keen to talk about a couple names throughout the oil and coal space. To start with Karoon. Now I'm excited to talk about this one with you because you said you went on a site visit there. So keen to hear how that all went down and what you're thinking on the company is after that.
Yeah, we did. It was a super interesting site visit. So obviously they've got offshore Brazil, and then they've got Gulf of Mexico / America more recently. And yeah, they did an investor site visit to both offshore platforms. And I'd say the main takeaway from the site visit is that we were the only fund manager there. There was one, so myself and Luke Larratt, that is. There was one other private investor who's quite a large individual shareholder of the company. And then there was a bunch of investment bankers as well, both in the US and here, that are all kind of sniffing around potentially for a US listing or whatever event they are looking for. But
That's pretty telling, isn't it?
it's telling in the sense that I think the sector is hated. I mean, who likes oil and gas at the moment? I mean, all I'm hearing is gold, 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 maybe copper, maybe one or two other things, but I think you'd be pretty hard pressed to find a less liked sector of the market at the moment.
We'll flash it up now, but there's this like chart of the gold to oil ratio throughout history, and
I think I saw that.
it's pretty startling when you look at it, with the exception of COVID. Like we're in uncharted territory, and anytime you get these like big spikes in this ratio, it's not like things just work like that forever. Yeah, you have commodity, like gold leads the way. Commodities are in vogue and focus, and oil price often comes. If people talk about the similarities between this period and the 1970s, well, yeah, gold led the way, and then oil took charge.
Yeah, it's I think oil, it's even at $60 or so, 65, looks pretty good. And yeah, Karoon, I suppose the other thing to mention is that pretty low cost producer, even though it kind of gets lumped in this bucket of probably lesser quality names sometimes. But yeah, we checked out the assets, and I mean, if there's probably a bit of nuance in the sense that it's hard, it's super hard, like going 200 Ks offshore in a helicopter with massive capital intensive equipment like it's no wonder that they have production difficulties every now and again. And if you're an analyst modeling 95% production uptime, like you're kidding yourself. But the thing we've seen with these capital intensive businesses is they do obviously have a lot more inherent leverage to the cycle. So when the cycle does turn, you can make some good money.
Yeah, and lots of push around the governance of this company like 18 odd months ago. A lot of that's resolved now, so you're getting the benefit of more thoughtful, like engagement with shareholders, more thoughtful returns to shareholders, like not M&A for the sake of M&A, and a register that is thinking long term about return to shareholders. I'm pretty sure Stam is a big shareholder there, joined by some friends, you know.
Yeah, I think they've got that mix right now in terms of capital allocation. I think they were super receptive just to general discussion and feedback from shareholders. So yeah, I think the management team's actually really good there. I mean, you've got the CEO Julian is actually departing, so we'll see who they bring in as the replacement top dog there. But yeah, I think all the pieces are in place there to get a re-rate here.
Yeah, totally. And should say ding, ding, ding on that one as well. Going into the coal space, Stanmore is a really interesting name. So quick numbers for the first half, 6.5 million tons they did at 89 US bucks FOB cash costs. So the balance sheet is, net debt 100 million, call it US dollars now. So it's looking a lot healthier than it once was. And we're at a pretty low ebb in the coal space. Are you starting to do a bunch of work? Have you held names, be it Stanmore or similar type names, for a while now, Ben?
Yeah, I mean, to varying degrees, I think right now we're probably a bit higher weight than we have been in the past, if at all. So yeah, Stanmore is probably the standout. I think probably Stanmore and New Hope Management are quite high quality, probably best in class. New Hope's obviously got the low cost thermal. Stanmore's got mainly the PCI stuff, so it's kind of a different dynamic and out of Queensland, so you got to obviously factor in the royalty rates. But if they're producing 14 million tons per annum of coal at that quality, at that cost of $100 a ton, maybe a touch more, then they're making decent margin even at current prices, which I think it's pretty clear that that's kind of well into the cost curve now. You've got some of the marginal players, Bowen Coke and Coal, couldn't get it to work. You've had BHP cutting back workers at Saraji. So yeah, I think that there's probably on a medium term basis, good upside in coal prices. And yeah, again, it just kind of comes back to the oil argument. It's like, well, energy is hated. We saw what happened when that, be it a supply shock like in 2022, or even just people not pricing these things as terminal decline. Like it's pretty easy to get Stanmore looking at like a $4 or $5 stock, and that's not even really incorporating any growth projects that they could kind of have a crack at if the cycle turns. So yeah, it's one we kind of back management in and just ride it out from here.
I'm with you on this one. I think even the guys who love coal, they love coal, and even they're pretty quiet like the last 6 odd months. And I mean, Stanmore's had some great green shoots in a very short period of time, but it's still too quiet. Things look tricky to get worse from a cost curve perspective. Like well, then New Hope you kind of touched on as well. I find that super interesting, but I really want to peel into your views on the mining services companies as a way to play a broader kind of commodity boom, like extra activity. Mining services companies, there's a plethora of different types of companies. Some are capital intensive and can often be just pretty bad businesses, and some of them are not capital intensive and can be magnificent businesses. What's your read, having done a bunch of work in this space, mate?
Yeah, I think there's a couple of names that kind of stand out to us from a quality perspective and an earnings perspective, whereas some of them, as you said, like it's just hard to get comfortable with some of these contractors, especially after they've run a fair bit recently that have the construction risk. Like I remember we saw NRW earlier in the year at a conference, and they were kind of had a temporary pullback based off that steel recoverability of potential, might lose some money on that contract. And yeah, that was probably the time to buy it. But instead, we actually bought Emeco, EHL. We also met with them around the same time. And this to us was like, it was really important to meet with management because we needed confidence that the sins of the past, like going into underground mining services and bit of misallocation of capital was in the past. But yeah, we met with them and got a lot of confidence that they were just like sticking to their knitting. Yeah, a few easy wins within the business to kind of get utilization of their rental equipment. So it's rental equipment for mining in Australia. So pretty broad exposure across gold, coal, iron ore, other minerals. So yeah, it was more of a case of, are they on the right track? If yes, what's the right price for it? And we thought, 70 cents range was not the right price when NTA was over $1.20. It's now $1.36 trailing NTA. And the interesting thing here is, yeah, you've had rumors of takeover in the press. I mean, whether that happens, it's hard to say. It's hard to see who the obvious acquirer would be, but you'd think any takeover bid would have to start at NTA, and that's probably going to improve to $1.40, like high $1.40s on our numbers. And you potentially got capital returns coming in the next 12 months, given they're generating over 100 mil free cash flow. So still think it's a bit of a, it's a good risk reward, I'll say, from here still, I think.
The mining services names are super, super interesting. And I think they're a kind of way, broadly mining services I'm talking, including mining tech in here as well. But they're that kind of way of playing the resource cycle once people start looking to see what goes next, in a sense. You've spoken about Imdex and XRF as well. Why don't we kind of start with Imdex for a moment, because they are, at the grassroots, at the exploration stage, they can really do well. And when you start to see all these capital raises happening in the gold space and other commodities, you mentioned copper as well there before, you start to think, hey, maybe a company like Imdex could get a bit of a tailwind. And they've just been an interesting kind of indicator of exploration action. Is that part of the thesis in playing this one?
It is. I mean, if you're a gold miner making record cash flow, I suppose where's that cash flow going? Dividends?
I don't think so.
I don't think so.
Sandvik ground support.
Yes, of course. That's the rational capital allocation. But
the ground needs to stay up. People need to stay safe. You need to invest in Sandvik ground support to get more gold out of the ground. Like you can't have expansion without it. In fact, mate, I know a guy who you should just get in touch with. Sandvik ground support.
Derek Hurd? Is that Derek Hurd?
Derek Hurd. Do you know Derek? I'll introduce you to Derek after this conversation.
He's a good guy, I've heard, but yeah, wouldn't mind an intro.
Stellar guy. I'll hit you up. I'll hook you up with Derek. If anyone else wants to be hooked up with Derek, just get in touch with JD and I. We'll hook you up. We'll hook you up with Derek.
Go Sandvik ground support.
Sorry, back to Imdex, mate.
Yeah, Imdex. I think the dollars are going back into the ground. Imdex is kind of the market leader in drilling technology, and yeah, they kind of consolidated that position over the last couple of years by acquiring the number 2 player. And yeah, I think they've just got really good leverage to, I mean, not only gold, but kind of across all metals. To be honest, I think we've owned this for a while now and probably been a bit early on it. Like, it's done well, but I thought you'd see a bit more. Like, I think they disappointed at the full year result, sold off a little bit, bought a few more shares, but yeah, it's kind of surprising that it hasn't fully flowed through yet. But I think there's probably just a couple of years of lag before you really start to get these drill programs kind of chugging, especially at the bigger company level, which is predominantly where they are. But yeah, I think, I've been seeing numbers on some of these gold developers that they're finding new gold. I'm always a bit sus on these metrics, but they're finding new gold at a discovery cost of, $10, $20, $15, $20 an ounce. But the point is,
it cost us $0 to lower the cutoff grade.
Exactly. But I think if you're having to pay, well over $100 an ounce to acquire any development project, well, potentially you could just get those dollars put into the ground, and Imdex is a good way to play it.
Yeah, it's a super interesting way to play it. If we touch on one more in that related kind of space, this one's really interesting before we jump into grade control. Euroz Hartleys. Now, the playing of the broker or the gatekeeper to capital in the mining space has always kind of fascinated me, be it, talking about Sprott overseas or any of the other brokers here. And similar to Emeco, we've started to see M&A rumours in this space. So BMO rumoured to be looking around here in Perth, looking at the other names. And then we also saw the financial numbers come out of Argonaut, and brokers love to know how much the other shop is making, who's doing well on the street, and they're all doing pretty well at this moment in time. But how much of your thinking here is just an alternative way to play the capital cycle versus a company that might be building out its private wealth platform, etc.?
It's a bit of both, really. I mean, we initially invested with the predicated on the fact that you had a big chunk of cash, you had this wealth management business where, having worked in this industry, it's clear that that's probably more valuable, or at least acquirers are willing to pay a higher multiple for that revenue. And then you've got this cyclical kind of capital markets exposed revenue, which maybe was low in the cycle a couple of years ago, a year or two ago, but you were essentially getting that for free. And I mean, we just thought that was kind of ludicrous, given that, gold price was actually starting to creep up at that point, and Euroz Hartleys are, I think, well known for their gold analysts and the deals that come with that. So, that was the initial thesis. I mean, now it's run a little bit, it's returned a bit of capital. Still think it looks very cheap, and now it's probably an earnings story where, Argonaut's printing money. You've got Canaccord over there as well. And Euroz Hartleys is the other kind of key player we see, and just kind of having dealt with their people, think that they're pretty good quality. It's the only one that's listed on the ASX of those as well, so potentially gets a bit of strategic interest, but otherwise, given the alignment with staff, I think you probably just get good dividends and maybe more capital returns in the future.
A super interesting one. They're I think they all get gobbled up in time and become part of the Canadian extension. Like how successful was that for Canaccord buying Patterson's? I think it was tremendously successful. I think it's kind of like a no brainer way to get real synergies, and you can point to that one pretty clearly. It's not like a hard thing to see from your perspective. You're just getting like notifications every day of a new capital raise from these brokers, and you're like, 6% of every one of these is going to these guys. Like, of course the business is going up. Yeah, it's amazing. Indulge us, Ben. We're going to very quickly talk about some of the news that came from the week from maybe some of the bigger end of town. I know you're a small caps fund, so it's all right if you don't have too much to say on these things, because I mean, I don't blame you for not paying attention to Rio Tinto.
I've always got an opinion on something, mate.
That's important. One thing we saw this week in grade control, Rio and its Robe River JV partners, they approved a US $733 million sustaining project at West Angeles to keep that hub at about 35 million tonnes per annum. So, look, Rio's cash share is US $389 million. The plan sustains Pilbara system capacity around 130 million tonnes per annum. There's plenty of construction jobs, of course, and they also target autonomous haulage from 2027.
I think a couple of interesting things. One is that if they're going to deploy all this capital into the Pilbara iron ore stuff, I'm for it. I think that's an A in my books, just because I think that's the highest return on invested capital that Rio, BHP, Fortescue can all do, rather than like there was I think Trav, you shared it. There was a slide in BHP's investor deck where they had return on capital across iron ore, which was like 40%, copper, which was in the 30%, and then coal was basically 0%. So probably I think they should be allocating more to iron ore, and the coal piece is more of that's how you play Stanmore, who's buying off these guys. But yeah, I quite like it in general. I think they've got a lot of good projects there. And yeah, don't mind that area of the world.
Yeah, it's going to be fascinating in like, call it 15 years time, when we look back at the deal that was done on Rhodes Ridge with the Bennetts and the Japanese, and we can ask ourselves the question: could Rio have done that deal in a bigger way themselves? And should they not have bought Arcadium and instead gone ham at Rhodes Ridge? It's the last of the best iron ore that we have.
Big question. Big question. Yeah, I think that is absolutely one that's going to take a bit of hindsight to look back to, and we won't be able to grade now. But the detail in what you said there that I want to underscore is the Japan-Australia relationship. We saw that with this deal as well. Obviously, Robe River is an exemplary sort of example of that relationship, and long may that kind of continue. Another one for the majors was Fortescue's Refi. So they came out with an announcement that they're going to buy back, I think it was sort of 600 odd million of their notes. We spoke a little while ago about what they have done in China in terms of financing themselves. And this broader trend of companies refinancing themselves is a big one that we should talk more about. We touched on it with MinRes, but you know, that cost of capital debate is huge, and the rates these guys are going to pay, it's not quite as cheap as perhaps the Japanese in the Rio example there, but it's coming down, and it's coming down for a couple of reasons. Obviously, you've got headline rates falling in the US and around the world, and you've got spreads tightening massively. So over the past 3 years, the spread, as in the difference that these riskier companies, the higher yielding companies have to pay above the safer or the government debt, is shrinking. And for a MinRes to come out with a sort of 7% number, and for these miners to be paying under 4% is magnificent. So I think we're going to see a lot of it. It's undoubtedly an A for the companies, and they should just jump at that opportunity. And the flip side of that is, obviously, if you drop the cost of capital, the valuations for all these companies go up, which is almost a scary thought in the face of the market we're seeing right now. But that's something we're kind of contending with at a global level. Ben, you look at things from a generalist perspective. I'm not sure if you've got... I'm curious to hear if you do have big thoughts on what these rates are going to do to perhaps supercharge an already kind of frothy market.
Yeah, not really, but I mean, it is interesting, as you say, like, do you start to run a lot lower cost of capital through your models? And that's probably, we saw that 2020, 2021 when rates were low, near zero, and then you can just kind of continually bump up your price targets if you're an analyst trying to chase the share price.
I'm waiting for these stories to come out in the coal space. Like, if you just think, where are the stocks mispriced from a cost of capital perspective? Like everyone has the cost of equity through the roof for coal stocks. Like, things are changing on that front. And then if your composition of your WACC is weighted heavily towards debt, and all of a sudden you replace your 10% coupon debt with a 6%, like, yeah, that makes a pretty meaningful impact to your WACC. And maybe there's a lot of mispriced equities out there as a result of that. Ben, derivative of the iron ore world, that you're a bit of a value hunter. Talk to me about Red Hill Minerals.
Yeah, I think this is the best kept secret on the ASX, this one. They've got a 0.75% royalty over MinRes's Onslow Iron project, which has obviously been super well covered by you guys, and I'm sure everyone's familiar with. But the bottom line is that the royalty holder isn't exposed to the same set of risks that MinRes is as the operator. And, you know, whether you like it or not, I think they've shown that they can get to this 35 million tonnes per annum run rate, which all that expansion comes at no cost to the royalty holder. You run 35 million tonnes per annum through your model, $100 iron ore, less a bit of a grade discount, you're probably spitting out $35-40 million per annum of royalty revenue. Red Hill, as the original, they originally found the Onslow project as it's now known. They trade on a 215 mil market cap, 160 mil EV, which is a lot of numbers, but I mean, it's 4 times effectively EBITDA. I think you're probably going to get more production growth there as you tack on another transhipper. And I mean, originally when MinRes was developing this project, they were always targeting a higher production rate, and I think they did that haul road deal with Morgan Stanley, which gave MinRes the upside. So that was always kind of the plan, and I think in time you do get there. And yeah, this is just a super interesting company. I mean, what's a royalty worth in a small or mid-tier company like this? Certainly not not the current valuation, I would argue. I mean, the other question marks, which I'm sure you'll be asking me is, well, they're still spending a bit on exploration and kind of, are you actually going to see that cash? Well, which is obviously, yeah, the big question. And I mean, you've got Josh Pitt kind of controlling this company, 34.4% plus some of his associates, I think. So they kind of largely control the register. But I suppose where we get confidence is they have been a big dividend payer in the past. So they paid out a lot of that other 200 mil payment that they got from MinRes, as well as kind of ongoing dividends. They've committed to 50% of Onslow profits as their dividend policy, which was a bit of an interesting one. But yeah, even on those numbers, the stock still looks quite cheap. And I think, yes, we would probably like to see them spend less on exploration and more on becoming a dedicated royalties player, because you could almost double the share price from day one, in our opinion. And they've maybe taken some strides towards doing that. Like they acquired a couple of other small royalties. One looked quite good. One, it's just an earlier stage one. So there's potential to kind of go further down that route, but regardless, I think you probably still get paid at the current share price.
I went to this company's AGM last year, and I don't have any concerns about governance or capital allocation. Like, just you've got long-term thinking, long-term alignment. There's not excessive, unnecessary spend. I mean, like, yeah, people should do a bit of Googling and figure out how successful at exploration Josh Pitt has been throughout history. It's phenomenal. Like, even if they're spending money on exploration, like I don't think that will be necessarily a completely comparable thing to other companies who spend money on exploration. Completely.
And they've kept the budget quite tight, consistently.
Totally.
Yeah.
They watch the dollar. You can tell that. I think it's a really interesting company as well. I don't even mind the strategy of buying, like the deal they did to buy those Sandstone gold royalties. I thought it was a good deal, and like I thought it must have been a bilateral deal, but apparently they ran a process and they just won the process. So anyway, maybe they'll actually be a competitive player when it comes to creating royalties themselves or acquiring royalties. If there's one trend I'm kind of pretty confident about in our industry over the coming wave of whatever's going on, royalty companies, small scale royalty companies, like they become super attractive. There'll be consolidation there, and I think they're very, 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 very attractive ways for a lot of people to have exposure to our industry.
Yeah, I mean, I know you've had Spencer Cole on the podcast before, and I think Vox is another really interesting one. It's not ASX listed, so no skin in the game, but I think their strategy is super interesting, like hoovering up these smaller royalties, which one in every X becomes Onslow, and yeah, it's a huge value uplift, and no one's really looking at them.
Yeah, well, they just did this deal like a pretty transformational deal for them, buying a pretty sizable gold royalty book off of Deterra, and that maybe gives them like sufficient scale to be quite attractive to. Yeah, I mean, heck, Elemental's now going to be the a bit of a vehicle for Tether to round up a bunch of things. I feel like Fox is a natural one on the list there for them, but yeah. Sweet deal, sour deal. Predictive Robex. This was a big bit of news in the week. Predictive Robex joining together. Predictive, the technical acquirer, 51-49 split. Serious synergies here. Operational team of Robex. Clearly, apply that to Predictive, and you've got a pretty interesting company. Guinea synergies. Like happy days here. This deal makes tons of sense. Do you think the same, Ben? Sweet deal.
I do. I mean, my only other point to add would be that if you're not reading the director's special daily newsletter, then what the bloody hell are you doing? Because I was trying to think when the deal got announced, I swear I've seen this before. Searched my inbox, and sure enough, it was I think it was in June that you guys reported that there was potentially a merger.
Yep.
And yeah, I mean, can't really make any money out of it from a fund manager perspective. Like these merger of equals, there's just, I mean, maybe you get some synergies and it probably makes sense as a deal, but I mean, that kind of area is tricky for us anyway. But Yeah.
I'd say this one's a sweet deal as well. Obviously not massive to your kind of point there, Ben, jurisdictional spread here. It's still Guinea and Mali kind of focus, but the talent to get these assets off the ground, super keen to watch that company grow. Capricorn and Warriedar had perhaps a final chapter play out this week as well, Trav.
Bit of a bump for the Warriedar shareholders. Instead of getting one Capricorn share for every 52.75, they'll get one Capricorn share for every 62 Warriedar shares. I think this is a pretty interesting precedent, just because like we had Jimmy Nichols join us a few weeks ago, and he said it'll come down to the independent experts report. If it says it's fair and reasonable, it might be trickier for an uplift. And I said I'll take the other side. And take that, James. I was right. But interesting part about this deal, there was no best and final like within the docs yet. I think that probably makes sense not to put that there just yet, just because there could be some who knows if there's more corporate interest in Warriedar that could still play out. So you reserve the optionality, but I wouldn't be surprised to see a best and final come out from Capricorn as the deadline kind of approaches on things. But yeah,
Sweet or sour?
Sweet deal. I think this is good for everyone. Like the peers to Warriedar had run between the deal announcement and like as time gone on with gold price running. Like I think this just acknowledges that, and it keeps. I mean, the Warriedar shareholders are going to be future shareholders. Like this is just like it's good for them too. You kind of want them on side, yeah.
Yeah, I'm with you. To round off sweet and sour deal, there was a heap of capital raises across the market. Far too many to jump into all of them. But the one that stuck out actually happened at the tail end of last week and then got upsized. 600 million was the Aussie-only component, plus the 400 million Canadian for NexGen, taking that one on board in the uranium space. Ben, thoughts on this one?
Yeah, I like this one. I'll give this one a sweet deal. I mean, there's a lot of other raisings that we've said no to, and probably goes to our Euroz Hartleys thesis. But anyway, the NexGen, quite like the look of that asset, as I'm sure everyone does. It's kind of well known that it's probably the best undeveloped uranium asset globally. But still think the numbers probably stack up if you're bullish on uranium. And the other ways to play uranium, we're not too keen on, be it Boss or Paladin or some of the smaller developers that are hoping for a US government handout. But yeah, quite like NexGen, think they're entering into a catalyst-rich period now where you've got permitting. Kind of reminds me a little bit of De Grey, which kind of it got bought into that period. I think NexGen's strategic value means it'll probably get bought as well. And I think it's a reasonable chance over the next 6 months. So we took a bit of that placement, bought a bit more. So yeah, like it.
The interesting part of this to me was learning. I don't think it's actually been reported outside of the Director Special, but Gina, via Hancock Prospecting, bid for $200 to $300 million of stock, and that's why it got upsized in Australia. Word on the decline, apparently, allegedly.
Yeah, and a lot of scale back too.
Yeah,
still.
Yeah, I can imagine so. I think like the permutation I'm running in my head is, at the permitting point that makes the most sense for a corporate outcome, like for sure, because shareholders probably don't want existing management to be the ones to develop the project, and they're pretty invested in an outcome in that sense. Now, when you might get a corporate event or some sort of bid and it's revealed, what's Gina going to do, right? Like, she's going to buy a blocking stake on market very quickly, and then all of a sudden it'll be a deal with an uplift, and it'll be a joint venture with Gina. I just think that's a pretty real possibility too. Yeah.
Yeah, there's probably a few ways it can play out. But I think the good thing with NexGen is it's probably got a range of potential acquirers rather than some of these more niche metals that, may be a great project, but like the majors realistically aren't looking at them.
Yeah. Hidden gems. What do you got to share, JD?
Hidden gems. I've got a couple things to share. Firstly, Trav, we started watching this doco yesterday. It's one I'd watched years back. It's called, so financial type of people out there will love this one. It's called Trader. Now, it's the documentary that focuses on Paul Tudor Jones and his correct calling of the 1987 crash. It is, it's eye-opening. It's kind of hilarious. It's very 1980s, and it's also pretty insightful. Like, Paul Tudor Jones is a massive name in the trading business, so that's one if you're into those types of things to check it out. And he's, of course, making waves with an interview he did earlier this week saying we're in 1999. So read into that what you will. And the second thing I'll call out is a podcast. The podcast is On the Tape, and it was an interview with Michael Lewis, obviously the famous author of The Big Short and Liar's Poker. And the podcast itself is hosted by a few of the guys that were in The Big Short, so Danny, Vinny and Porter, and they do this kind of weekly or kind of bi-weekly podcast, super interesting, but yeah, their reflections on getting to know Michael in the process of the book being written, their reflections on the financial crisis, as well as trying to take the pulse of where we are in the market right now. Ben, have you got something else for Hidden Gems?
I'm a big Michael Lewis fan, JD. I recently rewatched Moneyball again and can't speak highly enough of that movie.
Totally.
But what I do have for you is in terms of holiday spot. So in mid-year, I went to Iceland, which I think I want to call it out for the money miner community because it's got just incredible natural landscapes, geothermal. It kind of just like has a bit of geological beauty about it. I think it's just a stunning place to do a road trip around there. It is expensive, but when the market's running, hopefully you're invested in Seneca's funds, then you should have enough discretionary income to put to work there. So that's my one.
Awesome, mate.
Mine is the book that our audience is we call our audience the Money Miners. This book, The Money Miners. I think it's an interesting thing to reread at this period of time. Not like one reflection of the crazy nickel boom of the late 60s, early 70s was. No one rings a bell at the top, but it's very interesting to just read about, bubbles and human psychology, human sentiment as things kind of get more and more excessive and narrative kind of rebases higher and higher and higher. Everyone's making shitloads of money in a bull market, heaps, but it's always just good to just check and try and compare where are we at any point in time. So yeah, it's just refreshing to read at this period of time, I think.
Fantastic. Ben, thanks a bunch for joining us and sharing your thoughts on, we must have covered 24 stocks there, so really appreciate that. And a massive thank you to Sandvik Ground Support, Focus, the platform by Market Tech, and iMark. Get your tickets. Hoodaroo, Money Miners.
Hoodaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.